Okay, folks, welcome to Market Wrap for the 9th. Okay, so I have a couple of new charts up that I'm watching for. The 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 price action that we saw today was a bit odd on a couple of stocks. I sensed it yesterday with J.P. Morgan, even though the XLF was looking strong. I just felt confident with going short of J.P. Morgan. There was just something off in the force, and today we kind of had a bit more of that with the gap down, rally back, then a little bit of a fade at the end of the day. So this could just simply be a consolidation after a correction. We had 9 straight up weeks. It's nothing unusual per se. It's providing us a little two-sided action. We're able to scalp NVIDIA today. So we'll do scalps here and there. This could also be positioning in advance of earnings season, which begins in earnest on Friday. But we'll go through the charts. I have yet to look at them, but I did pull up 2 new ones I have added to the chart deck here. I'm not going to go over them every night because they're monthly charts, but as they change, we'll go over them because I do think that they are significant. So let's begin, as we usually do, with the CME FedWatch tool and skip to March, and we continue to see a decline. So the probability of a pause is growing higher, but not high enough to eclipse a rate cut. So it's all about the trend, and the trend is not going in the proper direction for the markets. And I think that's why we're seeing pressure on gold and strength in the dollar. May, we're back up to 100%. So it looks like they're eyeballing May now with confidence. They're pulling back on March and eyeballing May. So I think this sets the stage, to be honest with you, short-term disappointment by the markets that they may not get the rate cut in March, but anticipation will last longer, going out 5 months into May before you get that ever-critical first rate cut. What are they responding to? Usually that's a top in the market. So first chart up that I normally don't go over, and that is the Dow Jones Mining Index versus the S&P 500. And where we were seeing some promise here, that promise is backed off some. Let's take this off. So manufacturing has weakened up some. So this downtrend remains intact. So the one chart that stands a bit in contrast to that chart, the manufacturing chart, is the U.S. Containers and Packaging Index, which is breaking out or has broken out, setting up for a continuation breakout. So it's odd that we have manufacturing, which is still weak, but to be fair, we had 2 strong months, at which time we were able to break out on the Dow Containers and Packaging Index. I'm just checking this now. This is only as of January the 2nd, so this is why this makes sense. Okay, now what I thought was a divergence is not. For whatever reason, this doesn't update on a daily basis. So we're watching this. We have a breakout on the containers and packaging. They're packaging something sufficient enough to cause this to break out, but it's not reflected yet in the manufacturing index. So we'll keep an eye on it from time to time. I'm not going to go over it every night, but as it changes, develops, I'll refer back to it. Moving on to yield curve, updated for today. And we've been flat, 1 tick up today. Not much of a change here, but we are beginning to steepen, new weekly higher highs. Bond yields, inside bar. We can continue to consolidate. I think I went over this last night. It looked as though we could move lower, but it could have been the beginning of a consolidation, and that apparently is what it is. I don't think that this lasts. All the moving averages are going in the wrong direction, and that is not good. So I think that while we may get a move up higher here, it may be short-lived and we roll back over similar to what we did back here, but this is more established, meaning this breakout. TLT, 20-year bond ETF, bearish key reversal bar, inside day today. Not much happening here. I don't want to be hyperbolic with the name tags for these patterns because it really doesn't matter. All we're doing is consolidating. And this really goes back to what I was mentioning earlier, is that all we're doing, when stocks are oversold, they could stay oversold. They stayed oversold back here for weeks, a couple of weeks. That was in September. Late September, we ended that early October. Let's go to the weekly chart. Now, the difference between now and then on a weekly chart is that at that point in time, here is the beginning of October, RSI momentum was going in the wrong direction. Stochastics, weekly chart. This is the higher level view. So ultimately, as goes the weekly chart, so goes the daily chart. As goes the monthly chart, so goes the weekly chart. Until it doesn't. It stops, it consolidates, and then we begin to reverse. And that's exactly what happened here. So I don't think, this is a long-winded way of saying, I don't think that we're going to go through a long consolidation like we did back here because we have a weekly uptrend intact now. So we could quite possibly get a V-shape or a U-shaped recovery, and that'll send yields lower. Tips, bearish key reversal bar. Dollar, up a third, and it broke out. So this is what I was worried about. That's why we drew these lines, anticipating a bull flag setup, and we got it. Now, longer term, am I confident that we're going to continue to see this rally in the dollar? No, not unless the Europeans are going to become more debt-laden than we are, and that's hard to do. And we're going to be cutting rates. So it's frankly shocking to see the dollar breaking out right now, but it is. But volume is horrific. VIX, daily chart, broke down through support. Train wreck of a day, another one. Transports, inside bar. You know, whenever I see this, I always pull back on the reins of risk because there should have been a continuation breakout, and we didn't get it. Volume was heavy too. Dow Industrials, they look like they want to break out. Bull flag setup. Technically, yesterday they did break out, but they gapped down today. I mean, if we break this lower band of support, and in particular 37,127, which is a pivot point, support level on the Dow, there's something very, very wrong because this should break out. Volume was light today. And don't forget, and I keep forgetting this myself, that ADX is extremely overbought, and we're coming off right now. And that's the exact reason why we're short of JP Morgan. Small caps. In a triangle formation, waiting for the breakout. I would be a buyer. Down volume was heavy, but what are we down? Yeah, we were down 3%. Now, we are positioned here, which is why I am using the TNA versus the IWM because we have the strangle on TNA. And it's 50-50 which way we go here. Up, down. And that's why I like playing the neutral bet, just generating cash flow. The S&P 500 daily chart, down, light volume. Qs, up day for the Qs on sequentially declining volume. Let's go to the 30-minute chart, see how they set up for tomorrow. Yowza, this is looking really bullish for tomorrow morning. I want to take a quick peek at Microsoft in the after hours. Yeah, they're already bringing it up higher. Only by 6 cents. So Qs look as though they're going up. The banks. Okay, we should have had a breakout today. Didn't happen. We are very long in the tooth on the banks. I think that this is a classic setup for a sell the news event on earnings, even if they beat. ADX is at about 58, pretty overbought. Technology, tapping that 20-period moving average. Volume light. Consumer staples, daily chart, bullish key reversal bar on very light volume. Discretionaries, inside bar. Nothing exciting here, nothing to talk about. Energy, down 1.6% today. No bueno. Stokes weak and going to get weaker. Crude was up 2% today. Let me refresh this. Crude was up today and energy stocks got hammered. And they were up on volume, or it was up on volume. Oil, massive move today, up nearly 10%. on the day on big volume, so it's under accumulation. Gold, daily chart, bearish reversal bar. Let's go to GLD intraday view. Not looking good. Not looking good. Now with the dollar strong, we may move lower here. Gold versus the S&P, obviously very weak. Odds favor S&P bulls. Nugget broke support today. We rolled down the call side from 41 to, I think, 37.50, something like that, in that neighborhood. Where am I at? Hold on, I have it open here. 37. GDXJ, down nearly 1.5%. So you just can't fight this right now. It's in a correction. I don't think it's a short because it could do a rip your face off reversal bar if the dollar weakens up. I would just wait this one out. Sell calls. Silver, same deal here. I think this is going to break lower, but I think it's an opportunity. Silver miners, same deal here. All the same camp. Emerging markets. Now this is different. Here's the bear flag, a bull flag setup, failed. So now this is a bear flag setup. Volume about average. So all these dollar sensitive names are all coming under pressure. With yields rising, utilities are coming under pressure. I just don't think that this lasts though. I think yields, unless of course CPI comes in real hot and they rip up higher, yields need to go lower because the economy is weakening so bad. Boeing. So I'm very glad that we exited the existing position that we went into the week with and reestablished with more favorable risk-reward strikes because United came out with a report yesterday. They found loose bolts. There was talk of grounding a whole lot of 737s. Now, that had a little impact today. We had a doji star formation by the end of business. I think we're going to rally pretty soon. But this volume is still heavy. But at some point in time, ideally near the end of the week, as this all goes to the back pages of the newspapers and the back pages of the public's mind, we'll be looking for a breakout here intraday and a time at which we could go accumulating a position. Although I don't want to be long into earnings, but I would do it as a quick swing trade. This is looking bullish, double bottom, high or low, but the price action is not so bullish, at the close anyway. Philip Morris. I'm still going to call it Philip Morris. I like Philip Morris. I'm not going to call it Altria Group. Philip Morris. So I don't know why this is not saving my chart that I wanted. This is the one I wanted. Okay, so you can see that we broke out, retest today, we added more. So I have a pretty sizable position here because this dividend yield is just irresistible. And the fact that on a daily time frame we're breaking out, weekly time frame we're breaking out, what's not to like here? JP Morgan. Okay, so we went short yesterday. It gapped down today. It closed off of its lows. I think this is going to break though. Maybe they'll hold it in this consolidation until earnings, but I think ultimately this is going to break. And if they spike it on earnings, I will short more. And the only other chart I wanted to go over was Microsoft. This is a beautiful setup here. And when I take this symbol and I pop it into my Bollinger Band Squeeze setup, and you can see on a daily time frame, the Bollinger Bands are within the Keltner channels. This is probably going to break out tomorrow, very, very soon. So I think Microsoft is going up higher. And that's it for tonight, folks. Quiet night, not much happening today. I will talk to you tomorrow. Be well.